Hey everyone, wanted to show you how intuitive the spreadsheet actually is to be able to give us some kind of an idea of what is actually going on in the stock market. So we had a little bit of a rally this week. We had kind of a what's called a face ripping rally. So you just basically want to scratch your eyes out because you're expecting it to move one way and it moves another way. But the computers are doing that. The computers are programmed to do what they do. And there's somebody making money and there's somebody losing money every time the market has a gyration. And the gyrations are every 12 seconds now in the stock market. So when you're trying to do that, nothing makes any sense. So when things don't make any sense, if you look at Investors Business Daily, they point out that if things don't make any sense, get out to cash. And that's the problem with modern financial theory, is that they sit there and say, oh, some of the best days in the world were like yesterday. And if you were out of the market, you missed the best day in the world. Yeah, but you had 700 days of crappy days going into one day of the best day. What good does that do if your account has gone down 22% and you're up 2% yesterday? Woo-hoo, big deal. You're still down 20%. And now today you're down 1%. So you're now down 21%. What difference does it make? There are times, I strongly believe, there are times when somebody is just better off sitting in cash rather than being in the market, because the number one rule of finance is never lose money, and the number two rule is return of your money is more important than return on your money. Think about that. If you're carrying debt at 7 or 10 or 20%, and you're putting your money into your RSP, for gosh sakes, and all of a sudden your RSO, you put $1,000 at the beginning of the year in your RSP, and it's now down 22%. If you had $1,000 credit card bill that you're paying 19 or 21% on, wouldn't it have made more sense to pay off the credit card bill? The answer is absolutely yes. But the financial advisors in the world don't want to tell you that. They want your $1,000 with them because that's how they make more. That's how they make money. Okay? It's how it happens. It's all good. So I believe that there are times when somebody should be out of the market. The bond market is getting crushed. The stock market is getting crushed. There's no place to go. The only place to go is if you're an American, you can buy $10,000 worth of TIPS, which are inflation indexed bonds. You're only allowed a small amount of them, but that's really the only place you can go, unless you trade or position yourself in stocks that don't go down very much or that are having a better time. There's a few of those. And if you had a gain in Amazon because of the split, and it went up to 125 after the split, and it's working its way back down to 100, you're still net even because the split was 100. So it's all good still in your account if you had individual stocks in there. And money managers have moved to cash. They're carrying a lot of cash in your segregated funds or in your mutual funds, but they're still down for the year because the market is selling off. But let's go in and show you here quickly what's just happened. And I'm going to use my handy dandy scissors as a pointer here today. So this is the XLP. All of a sudden we've turned exceptionally negative. We're still in a rally technically in the XLP based upon its pricing point for today. But notice what this correction or reaction was. We're negative 41, and this becomes important. This red zone, negative, notice how the other red zones there are only negative 11, negative 4, negative 7, negative 41. In a zone of safety, because the XLP is typically safety, that's not necessarily a good thing. That means that somebody out there is out there selling, raising a bunch of cash. Okay? So let's go over to the XLP or the XLE, energy index. I've liquidated all of my energy index. Okay? And here's why. Negative 80. Okay? The last negatives were negative 22, negative 039. This is negative 080. And notice the two blues. Somebody is in there selling because this is the place where the run was. This was where all the money was made. And now somebody's in there deeply selling it because they need to raise cash for something. There's some kind of systemic risk on the globe someplace. We're not being told what it is. The central bankers all know what it is, but we're seeing that in the spreadsheet, at least intraday today. So here's the XLU, which is utilities index. It again, negative 0.66. Now, utilities are a storehouse of value, but because interest rates are going through the roof and utilities borrow a hell of a lot of money at high interest rates now, your electric costs will go up because the cost of borrowing money to run new electric lines or to maintain the 60-year-old system that we have that nobody's talking about. It's one of the most archaic systems on the planet because we've never upgraded them. All of our nuclear energy plants are like 97 years old now. They're archaic. That's an exaggeration a little bit, but it's archaic. Okay? And yet we're moving forward with this new technology with this old archaic footprint. This is tech, 0.89. Okay? Moving down into sell-off. It's no longer even in a rally. It never really was in a rally. This is the rally column. We just had a bear market rally. That's all we had for a day or two. And now it's turning negative. Okay? Strongly negative. And then here in the XLB, negative 80. Somebody's selling this beast off, and it's now no longer in rally mode. It's now in sell-off mode. Okay? And this move to its sell-off will probably change it from green to red pretty quickly. We'll have to see what happens Monday. Monday, I believe, is going to be our Black Monday day. We're going to have one of those sooner or later. Here is the XLY, which, again, XLY, I think that's XLC, XLY, I forget. This is consumer staples. So consumer staples are consumer discretionary, air flights and stuff like that, Airbnbs and stuff like that. 71, negative. Never was in a rally. Selling off. XLC communications. As you know, I hate communications. People are not paying their cell phone bill. They just aren't paying. They have no money left after they pay for groceries. And look at the XLC. Never was in rally mode. Been consolidating negatively since that blueprint on the 7th of October. XLF. Again, the 7th of October, a blueprint. And where are we at? Negative 61. Yet bank earnings came out today. Now banks are in, technically this is green. Let's change that to green. So banks are technically in rally mode today. All right? They are. It's the only sector in rally mode because the banking profits came out so far today and they're actually holding up. They're not all that great, but they're holding up. And then here is our XLV, which is healthcare. Again, a place where safety comes in. But again, we've printed that blue and we're selling off. XLI, industrials. We never printed blue in industrials. And the reason for that is industrials are strong because we're onshoring all of our production. There's no boats coming to the United States right now. There just isn't any. Freight rates actually for ocean ships have dropped by 75% because there's nothing that needs to cross the ocean right now. We are producing most all of what we need, and our warehouses are full now since we've unloaded all of those boats that were sitting out there. We have no demand. There's no demand for anything other than food. Nobody's going out and buying Nike shoes. Nobody's going out and buying, we're just not buying that stuff. We don't need it. It's like, I'm just going to have to wear my shoes that I, haven't bought anything in COVID. I guess that's what we're doing right now. We're battening down the hatches. And so here, again, negative 71. I'd have to go back a long way to find a negative 71 print. What's the rest of the market doing? Well, it's done its classic reversal here. Yesterday, we were 0.8374. We're all of a sudden 0.8357. Okay, we're still in rally. But then we've printed ugly other things here too. It's just not all green. Okay, so then we look at, what did we do today? All of a sudden, we've moved red here on the Dow. We were expecting, based upon the data from yesterday, we were expecting a 31,416 rally. 31,416, a rally to 31,416. Yet all of a sudden we're selling off today because somebody's in there liquidating their portfolios. BlackRock, there was just a story that BlackRock has lost trillions of dollars of net value because of their positions in markets, trillions of dollars. Now, we don't think that BlackRock is the systemic risk. Heaven forbid, because they're the number one place on the globe. That's not Larry Ellison, but that's Larry Fink. Now, yeah, he's lost trillions of dollars, or at least $1 trillion. And that's a hell of a lot of money for any government to have to make up. But somebody's in selling. Somebody's in selling hard this Friday. And it happens every week. We've seen it at the end of the day last week, between 3 and 4 o'clock. But all of a sudden today, we got the selling at 9:40 or 9:50, 10 o'clock, which is a hell of a lot earlier than 3 o'clock. So there's some systemic risk. There's something happening out there. And they're crushing oil, which is interesting as well too, because the Saudis have admitted they don't have any oil to even be able to pump. That, again, was not news that was covered by our mainstream press. How dare they cover anything oil related? And everybody's back to work, so everybody's driving. But we had gold sell off, we have oil selling off, we have the Russell selling off, we have the NASDAQ selling off, we have the Dow selling off, and we have the S&P selling off. That tells us that somebody, someplace, is liquidating even their gold. They're selling their gold to raise this thing called cash. And that's why the average investor should always move to cash. If the smart people are selling to cash, why wouldn't an advisor tell their client, hey, it's time to move to cash? And why didn't they do that back in January when the market was signaling to all of us that, hey, this is going to be a really sucky year? And the press has been, we're going to have a recession in 2023. Well, why in the hell would your account be anything but cash? Because a recession means earnings are going down. The number one valuation of the stock market is increasing earnings. And we've been barraged with the concept that we're going down. Earnings are going down. Down. And then they come out and say, oh, there's some really good buys out there right now. Average investor should be dollar cost averaging in because this is on sale and we're going to do really, really well over time. Who knows what's going to happen? The spreadsheet sure doesn't know what's going to happen. It's saying, uh-oh, there's something going on. Hopefully it gets fixed. Bond yields are up. That means bond market down today. The U.S. dollar is sinking a little bit. That will help a little bit. Well, no, that's British pound. British pound is below parity. That means that it's cheaper to go to Britain on vacation for an American. The silver market, they've been buying silver and taking possession. All of a sudden, somebody's selling their silver position. Why? what's going on? And then Bitcoin US dollar is soaring as people move to something that they feel is safety, but they're getting rid of the safety to move to this Bitcoin thing, this electronic thing. It doesn't make any sense to me whatsoever. But anyway, that's what's going on in our market today. I've sold all of my long oil. I have sold all of my short tech. And all of my long tech, I am now sitting 100% cash other than one trade. I have the short QQQs for today based upon what the spreadsheet is looking like. And so that just tells me buy the Qs, hold on. At the end of the day, I might go in and just liquidate my Qs because I don't know that I want to be holding a short position, triple short position. It's only a few shares of the Qs. It's not like it's a massive thing, but I don't know that I want to be carrying that over the weekend, but I might. My instinct has always served me well, and my instinct is saying that Monday could be pretty difficult. There's something going on out there that we don't know what the answer to that something actually is right now. But thanks for tuning in. I appreciate it. Have a great day. Bye-bye.